So it is May 2025. What's going on in the housing market? So in the last 30, 45 days, we've seen the tariff stuff come in, stock markets go up and down. So what do we do with this? Where is the market at today? 70% of Americans are concerned about a potential housing market crash in 2025. I think that comes with consumer confidence and fear. When there's ever uncertainty in the markets, nobody knows what's going on and they will, be more concerned and look to the negative. My therapist says all the time that, we as humans look to the negative first. So I think that's there. I don't think we're ready for a housing crash, but you never know if we see some kind of slowing, as we've talked about in the past. A lot of the three other main, areas in the country, the three quarters of it, have already started to see a little bit more price compression. You're seeing a little more supply come on as demand goes out. In the Northeast as a whole, we're still doing pretty strong, and you'll see by some graphs coming along. 32% of those who plan the major purchase this year say they're now delaying it, including 1 in 4 households who plan to buy a home and 1 in 8 households plan to sell a home. I've seen this a lot, some on the buy side, but there's still more buyers than there are sellers out there. What I've seen with a lot of sellers is they're like, you know what, we don't know what's going on with the economy now. Let's see what's going on. Let's wait, which doesn't help us because that adds to the supply and demand issue. That supply issue is now a little bit more hold up. And I think people that were thinking about it this year, some of them may be now saying, you know what, I'm going to hold off a year or two until things stabilize on the economy. Though many Americans believe the housing market is at risk of crashing, economists who study housing market conditions generally do not expect to crash in 2025 or beyond unless the economy outlook changes. Business Insider wrote that. I agree with that 100%. I don't think we're headed for a crash. Do I think that things may stabilize in a year from now? Yes. Do I think that, they'll be on television saying that the U.S. was in a recession? Most likely. And I think when people hear that, they're going to just be a little gun shy to kind of go crazy on stuff, which honestly, in my personal opinion, I don't think that'd be the worst thing for the market. Here, a little bit of a slowdown. Remember, these are national slides, so in a lot of other areas, values are starting to decline already, and that is, something that they want to kind of turn around. So we're not immune to it. It just hasn't necessarily hit us yet on a larger scale. There's just generally not enough supply. There are more people than housing inventory. It's Econ 101. Mark Fleming, chief economist, First American. Absolutely. I was with somebody the other day and we were talking about areas like in Arizona and Florida, and they're just building there. And that's that type of market there. In the Northeast, especially here in Westchester, Bronx, the 5 boroughs, there's no land. You're not seeing 500 units come up, in a matter of 2 years. You may see 100, and it's spread out throughout many, many different areas. So it's just where we are. There's still a lack of land where we are, especially in the metro area. So we're not seeing that large influx of supply, and I don't see that changing much over the next few years. The supply of homes for sale is improving, but still low. It was 30.6% higher compared to this time last year, but we're still 16.3% below the pandemic levels. And why is that? It's the low interest rates. A lot of times I was talking to clients, and we've talked about this in the past, that until the life factor outweighs the 3% interest rate, you're going to stay put. I think as prices decline a little bit nationally and people could still sell here in the Northeast for a higher number and now buy at a more reasonable number, or in a year from now buy at a more reasonable number in Florida, Arizona, Texas, et cetera, maybe we'll see a little bit more, people saying, okay, now's the time, it's 7-8 years from this at the beginning, let's make a change and get out of here. Stability in March, volatility in April, the 30-year mortgage. So it's up a little bit. We were kind of hovering around that 6.5 mark for a while. It fluctuated anywhere from, 6.5 to up a little bit over 7. Right now it's kind of in the high 6s of where things are right now. And I think some of the economists were a little surprised at that with all the tariff talk and the sell-off in the stock market and then kind of the bounce back into it. But rates kind of stayed where they were. Remember, mortgage rates are based on the 10-year treasury. The Feds just decided that they're going to hold the Fed funds rate for now because they're a little bit worried about inflation, especially with all the tariff stuff. So let's see what happens. We're going to see over the next few months what shakes out. I don't see any major changes in interest rates, over the next few months. But hopefully by the end of the year, we're back under that 6.5 mark. As the great Chicagoan Ferris Bueller once noted, life moves pretty fast. For the time being, we're well positioned to wait for greater clarity. Jerome Powell, chair of the Federal Reserve. They're on hold right now. Federal Reserve is saying, let's see what happens. They're not heeding to any political pressure. They're saying, let's see what the economy does, which, in my opinion, is the right thing, and that's the Fed's job. So hopefully that continues through. Inflation easing, but still remains elevated. We are, as of last month, was 2.6% inflation from March. The goal is 2%. So we're still up a little bit higher than what they want, which makes sense of why they held strong, at the last meeting. Let's see what, the tariff stuff does to inflation and see where that all ends up. Unemployment rate is still pretty steady. The feds are looking, Federal Reserve kind of wants to see that up a little bit just to kind of bring balance back to the economy. As of the end of March, it was about 4.2%, compared to pandemic, it was 14%, but that was really because people were home. We've had pretty steady, probably an average about 4%, for the last 5-6 years. So where are they thinking rates are going to go? So by the end of Q4, the average between the four major Fannie Mae, Mortgage Banking Association, National Home Builders, and Wells Fargo, the average is 6.36. I think that's pretty good. I think we're probably going to be there. So where the talk was for a few years that rates would dump, into the fives, it's not. It's holding. And don't get me wrong, 6% is still a phenomenal interest rate. 6.36 is great. I hear people tell me they bought homes in the 80s and 90s at 17, 18%. So it's a great rate. I think it's kind of stable. Would I love to see a 5%? Absolutely. But if this is what we have today, this is kind of what we have today. Even in an economic recession, generally home sales can rise if mortgage rates decline. Absolutely. Chief economist of NAR, Lauren Trent, said that. Without a doubt, recession does not mean home prices decline. It depends on how bad a recession, if we have the recession, and what do rates do. If rates go up, which usually doesn't happen in a recession, then yes, home prices could drop down. If rates drop into the fives and, we have a little bit less demand, I still see that we'll have a stable market. So overall, we're healthy right now. We're seeing highest investment in a lot of properties. Things are moving quick. There's a low inventory and still a high demand out there. I think that, we are in a good position to continue to move forward. And we'll watch the overall economy and rates, but I think it's a good thing. So if you have any questions, feel free to reach out. Happy to hear and chat and see what's going on, what's right for you.